Good afternoon, everybody. This is 29th of January, and we are ahead of a very intense weekend. Week. We had a very intense weekend. A lot of things happened, and if you watched my last weekend video in Hungarian, you know exactly what dangers we are and facing. And there are more information just coming up in the topic and out of the topic as well. So the geopolitics will be a key point of the market in the following months. But in this week, especially, we need to focusing a little bit on macroeconomics, even geopolitics and the corporate earnings as well. So let's dive in. First of all, the previous week wasn't as smooth as I imagined at the beginning of the week. From Thursday to Friday, we got very mixed data. As you can see, the US advanced GDP increased to 3.3%. And, everybody is very happy with that. Oh my God, this is a good data. Don't forget that this is an advanced data, first of all. Second of all, this is declining compared to the previous one. And moreover, we know exactly as I detailed on the Discord server earlier and in the previous live streams that there are very certain reasons why the advanced GDP managed to go higher. Mainly for the decline of the dollar in the last quarter. So that's not as nice as people are stating. And also we got very well-named economists all over the world, and they are questioning the how to say in a diplomatic way. They're questioning the rightness of the US data, especially from the job sector, and this raises questions, and I think they have all rights to questioning those data. For example, when we're talking about a stagnant unemployment rate, but 83% of the states in the United States is reporting increasing unemployment rates, and highly increasing unemployment rates, and then we got the overall unemployment rate is still stagnating. That something is fishy with those data. You might heard about that, and on YouTube I did so, and I kind of agree with them. I understand that not everything is, as fishy as people would think at the first, but there is definitely something that needs to dig into and figuring out what the reality is. Now, we experience some of the increase in the unemployment claims, but, I think, I'm not saying I was the first, but a couple of months ago, I tried to signal that, first of all, the data is not as reliable as people would think. And also, this is a little bit less important now because the market is focusing on the unemployment rate. But it's still rising now with a very little pace. And, we didn't break any trend so far. There is a downtrend in unemployment claims, which the reality probably would show the opposite, but so far this is data what we get, and this is data what the market is reacting for. So we need to accept as it is if we try to interpret how the market would react for the data we're receiving. So there is an increase, that's negative. There is a decreasing advanced GDP, that's negative. And we have an advanced GDP price index, which is also declining, which is again negative. So it's coming down from 3.5% previous, which has been revised to 3.3%. And then we got the 1.5%. Now, don't forget that this is a very, very similar situation what we experienced in 2007. I think it was in 2007 when before any kind of crash, we had reports about good-looking GDP data, and suddenly the next quarter was reported. First of all, they revised. So I think that was a 3.5% GDP, something like that. I'm not sure with my memory, but that was very eye-catching. And when the next quarter data came out of the GDP before the crash, they actually revised the previews from 3.5% positive to, I'm not pretty sure what was the exact data. I don't want to say any stupid here, but that was something like 1.2% in negative. So that's what they did. So they completely changed everything about the data and just suddenly got a negative reading, and that when the stock market realized that, oh yeah, well, I've been stupid in the last 1 year when I thought that the stock market can go only to the upside. So we gotta be very careful, but we already have those negative data. In addition, core durable goods orders increased from 0.5% to 0.6%, but defense ordering was increasing, and the rest of them didn't really did the job. While we have 0.0% durable goods orders, so that's not a core data, that's a normal data. That's again, the previous was 5.4%, has been revised to 5.5%. That's absolutely fine. And as I stated last month, I see reality in the data, and I think that's a correct number, what we're seeing here. But if that's the correct number, then 0.0% is just, that's very, very low. So again, we got a negative data, and well, obviously there was a ECB press conference after the main refinancing rate, which was staying at 4.5%. No surprise. Well, it's a surprise for those who was expected any kind of rate cut in the European Union, but that was just physically impossible. So many times we talked about. So if somebody's surprised about that, I really recommend to start learning about macroeconomics and how politics and the economics overall is working. So we got new home sales, which is up a little bit from 590k, has been revised to 615k, and then the new data become 664k. Well, we can say that this is an improvement, but to be honest, that's not a huge improvement, and it doesn't even counterbalance the negative effects so far what we get from the United States. And so that was Thursday, and actually that turned out pretty much negative for the US economy. And then on the next day, we got Tokyo core CPI down from 2.3% to 1.6%. Japanese yen obviously doesn't like this data. We got EU M3 money supply up, and that was a pretty interesting information. So from minus 0.9%, we got 0.1% in positive. And so far, we are seeing some little sign of improvement in terms of the decline. Now, as I emphasized so many times, we need to interpret this data for the long run, not for the short run, and therefore we're not even focusing on each of the data differences, how it would impact the market, but rather we are focusing on the trend. So now we have a correction in that trend, and the question is whether can we change the trend or not. And I think we still need an additional 3 to 4 months to see on the data whether we're really trying to turn around here at this point, or we're just having a bump to the upside, but then we'll continue to go to the downside. It really will depend on the monetary policy and the ECB, which is not raising interest rates at the moment. But if you would see that the inflation is going through the roof rapidly, then it still could be a scenario that the ECB is returning back to interest rate hike, which would be very, very risky game because the economy is on the edge, and any further rate hike would further destroy the bad situation, but it is already really terrible in the European Union. But if you read my analysis and the macro analysis, then you know what I'm talking about. Especially next week, a couple of analyses will try to emphasize this topic. So now we got the EU private loans, which is declining further from 0.5% to 0.3%. I don't think that anybody would be surprised about that. It's still a very high interest rate environment, so no surprise that loans are just technically shrinking. When you see loans are shrinking like that, and we didn't see that for a very long time, to be honest, that represents the EU economy. As you see, that's the EU economy. And yeah, it's somewhat, we can say that somewhat for little periods it's slowing down in decline, but in reality that's still try to convert to zero. So not very good, not very positive, neither for the European stock market, neither for the currency itself. Now, obviously, we're not talking about that just because this data is declining. The European stock market's supposed to go down like hell because there are other effects on the stock market. And if they are stronger on the positive side, then yeah, we're going to get the positive outcome. So we shouldn't be surprised. And then we got the US core PCE price index, which is the monthly based data. And that's increasing again from 0.1% to 0.2%, trying to suggest that that was the bottom of the CPI decline, and we probably turning around. Now, the real question will be whether we're going to go to a very high level next time, or we just keep it moderate, any kind of increase in the inflation. But re-inflation is really showing up now, and we really need to focusing on, because there were companies figured out the way how to keep, let's say, the revenue on positive in an inflationary environment. And inflation is not gone, it's still staying with us. The only reason why it's down is because of energy prices. But the thing is that those companies are started to really experience the consumer spending decline, which is very rapid. And as you can see, consumers are really in trouble. I know this is a European data, but believe me, the US data is not much different in terms of private loans. So if there are no private loans out, that means that people will not spend as much as they did before, which is supposed to be obvious. And therefore, if we see the inflation coming back again, it doesn't need to be very high. It's really, really damaging on any level, even for the companies, even for the consumers. So now this inflation increase, this inflation rise is not the same what we experienced last year or the year before. It is different, and it is much more damaging, especially for companies. And I reported to you on the Discord server, and I hope you're really watching what I'm reporting, because I'm telling you what is going on real time, and not just bullshitting around with other very strange news. The reality is that companies, so many companies are laying off right now for so many people. So I can somewhat agree that the unemployment rate number, the overall unemployment rate number in the United States is fake, because I also cannot believe that 83% of the states reporting rising unemployment rate, and then there's just a couple of smaller states that supposed to counterbalance this so much rising, and the unemployment rate is really just stagnating. I cannot believe. So I agree with those economists. The real situation is far worse than we are seeing in the data or in the news. We're going to get reinflation again, and we're seeing in the data, especially in the commodity market, but we're going to talk about that a little bit later. And so this is just like they preparing for something, and they try to make the data as nice as possible until that something is not happening. And we all know what is this something. Again, as I said, in 2007, that was exactly the same. We got the GDP data, 3.5%, and the next quarter, with the next GDP data, they revised that backwards, and they said, oh, sorry, that wasn't really positive. It's actually a negative 1.2% GDP. Shocking. So that's what they're doing with the numbers. And when we know exactly what is happening in the United States, you just can't say that this is right. The data is really representing the reality. It's not. But as I said, the data is here. The market will react to this data. So we need to also interpret how the market could react for that, because that's what they see exactly. So yes, so reinflation, the signs of reinflation is already here. And that's a pretty dangerous situation, because we're going to talk about earnings, but from the earnings side, this week is very important. But at the same time, this week is also very important because, for example, not today, tomorrow, we're going to get USCB consumer confidence and US George job openings, which is also, again, not really representing the reality. It's way lower. The real number is way lower. And so many government jobs were opened, never filled. So many bending in this data. But again, the market will react for that. And one day we're going to get the real data, maybe later on, and then we can figure out what really happened in 2024, January. Ridiculous. But anyway, so if those data cannot improve anymore, that's a basic negative effect. But just because of that, we're not supposed to see any kind of negative movement on the stock market. But if there is any additional thing which is impacting the market negatively, then we might see something very special. And that special could be, first of all, the ADP non-farm employment change, which again, probably will not be as correct as we expect. But then there will be the US federal funds rate tomorrow, and the market is expecting rate cuts. That's what the market is expecting. So can you imagine if you get a negative or not too positive USCB consumer confidence, the US George job openings data will not be as positive as people would expect. That's not a big problem. But you take that additionally, the US federal funds rate and Jeremy Powell will disappoint the market and say, I'm sorry, we are not really raising interest rates. Cutting interest rates. Then this will be a huge disappointment, and then the market could react on a very negative way, not only because of the disappointment, but then because of the previous negative data as well. So be ready for that. And last week we got the negative data for at least from the economic perspective. So yeah. Things are heating up pretty much, and there is another very important data on Wednesday, which is the employment cost index. It could be a surprise again. So what can I say? These are hard times, and I think those macroeconomics data is not a lot. It's not a lot, but it's good enough for making changes on the market, especially in the market condition where we are right now, which I'm going to show you a little bit later. So that's what we're expecting this week. And honestly, in terms of effect, it's supposed to be negative. And if we got the expected, so that the Fed does not change the interest rate, and some of the additional macroeconomic data comes negative as well, the whole week, the whole macroeconomic effect on the stock market is supposed to be negative. The only reason why I'm not highlighting in red, because at the same time we got this S&P 500 euphoria, which I'm going to show you something about it in a minute, and therefore there is a larger power in the market right now, which is positive and counterbalancing the negative effect of the macroeconomics. So it's a weird situation, but I can't just state that we can expect an obvious negative effect on the market. So we gotta wait. Now, really, this is the week when we gotta wait the data, we gotta wait the reaction, and then we can say what the hell is going on in the market. But that's the macroeconomics, and it's not improving. So the points will not improve. In the previous meeting, there was some improvement in the macroeconomics as well, but now that's changing, and the expectation is negative as well. So I did not increase the points at all, but in certain places, I cut some of the points from the macroeconomic effect. But we're going to see at the overall point checking. Now, here's the geopolitics. This is not an easy situation, because the thing is that every problem is still there. Even if you don't hear too much about it, the Ukraine-Russian situation is still there. Israel's fight with Hamas is still there. Everything is still there, and there are additional things for the United States and not only the United States and the United Kingdom, but there are additional countries are going to the Red Sea and trying to make a patrol shift, if I can say in a diplomatic way. But we have now additional things the U.S. Border problem, which is a really, really big problem. Now, I'm not saying it's unprecedented, but it's really outstanding that the governor of Texas is going completely against Joe Biden, and technically the whole country is standing behind him. Now, I'm not saying that Greg Abbott's supposed to be the president of the United States, but what he's doing right now is representing something United Nations, or let's say in the United States. That's a better word for that. So it is a geopolitical issue, because obviously the issue is between the US and Mexico, but at the same time, it's growing, it's spiraling out to other countries, because the millions and millions of migrants that try to enter the US border, or they actually do enter the US border, or they are from different places around the world, and that's including China, African nations, the Middle East nations, South America, everywhere around the world, they're trying to get in there. And let's just make it clear, this is illegal immigration, and that's not a good thing at all. We talked about that on the weekend video, so if you watched it, you know what I'm talking about. If you didn't, yeah, you gotta go back, but make sure this is Hungarian, so if somebody's English listening down, then it's not gonna happen. So the other thing is that a new problem just arose over the weekend, that 3 US troops have been killed in a drone attack in Jordan, and there are more than 30 people injured. So this is they suggest that this is an attack from Iran, or it can be connected with Iran. I don't think that anybody's surprised about that information, but this is an escalation. So now, since the Gaza war is ongoing, the first US troops died, and not happy to see this. I obviously not a supportive person of Joe Biden. I don't, and I have my own personal opinion about the man. But he responded that he's supposed to respond on a harsh way for that happenings, which means we are extending the war, which means we could very easily this week stepping from stage 1 to stage 2, and from that moment it's going to be a spiral if it's happening. And that was a very hard job already to stop this madness, and I understand that interests are requiring the war globally, because economies are, they are really needing, and usually the war is the one which is solving the problem. Question mark. But and I understand this, and I understand why it was a hard job to fixing the problem, because they didn't want it to fixing the problem. But if we going to stage 2, any kind of fixing opportunities are just going away, and we're just gonna go down the drain with this war. And the really question will be that who and which part of the world will be damaged because of this war, and it will extend definitely. So escalating hot situation all around the world, and even inside the United States. So well, I don't know how to make it this nicer. It is not nice. So I had to adjust the points of the geopolitics, and obviously not to the positive direction, but to the negative direction. And I'm really closely watching the developments of this situation, because that's something we need to pay attention. And we're not talking about months anymore. We are talking about weeks when things are going to happen. Especially because we are in a time when we just witnessing a very important earnings season. And so far, my prediction was pretty good with the earnings season. And therefore, I would like to highlight that this week is extremely important in terms of earnings. And you know already what's going to happen around the macroeconomics this week. You know already what's happening with the geopolitics this week. Now you need to know what's happening with the earnings this week. So you try to imagine how important this week is for the market. So there will be no major earnings on Monday. There will be, but not about the larger companies. And then Tuesday, Pfizer, GM, UPS, Microsoft, AMD, Alphabet, and Starbucks. So those are the big ones. And they are coming on Tuesday. On Wednesday, Boeing, Qualcomm, MasterCard. On Thursday, Merck & Co., Meta, Apple, Amazon. And on Friday, a little bit of energy as well. And mostly the safe haven area is Exxon, Chevron, Abvai, and Regeneron. Now, here is the catch. We know exactly what they're playing right now. And I'm witnessing it because I am watching it every single day and checking out the outcoming earnings. And what they do is actually they're reducing the expectation. I mean, really harshly reducing the expectation of revenue. And then they put the new revenue just slightly above or slightly below or right above the expectation, the reported data. Therefore, they can say that actually whoever exceeding the expectation, they can say that's very positive because we are better than expected. Yes, but there's nothing good in that if you cut the expectation with 80%. Because the expectation is supposed to calculate that how much the company should grow in revenue in order to keep the healthy environment and keep the healthy growth. If you cut the expectation, it doesn't matter if you're better than expected because you're worse than you're supposed to be. You're way behind any kind of healthy working environment or performance. So I'm not going to lie with those informations as every other major news lying about it. If there is a large company and exceeding the expectation, they are reporting that how good it is. I'm not going to reporting that how good it is to you. I'm going to reporting if they are really cutting back the expectations from a healthy level and they just barely reach these expectations. I'm going to say the true, the real information, which means that those companies are about to die, and that's very bad. And it's not a coincidence why I was detailed to you on the Discord server how many layoffs we can expect only this year, at the beginning of this year. So it's already unbelievable how we don't see the so much layoffs we already experienced in 2023. So we don't see them in the unemployment rate data, which is ridiculous. And unbelievable. I don't think it's real, and so many others don't think it's real. So I'm going to show you the real data. I'm going to show you the real performance in terms of the earnings, and believe me, the reason why this is the good direction to see and not showing what everybody else is showing is because one day, at one point, the market will correct back to a natural level where it's supposed to be. And we need to know where is the level where it's supposed to be. And right now, this level is lower day by day, and it's already very low. Just one day, when this bubble is popping with this couple of really just a few company shares on the market that's pushing the market higher, but the rest of the market is just like nothing. They don't move it. So there is a very high possibility that if they don't fix this problem, I need to say on that way because, I don't have to rule out any, or I shouldn't rule out any of the scenarios. And therefore, the scenario that they're fixing the problem is a possibility. That's another question, how many chance I see on that. Not too much. And therefore, if the bad scenario can come true, which is highly likely, then it's going to be a very bloody market reaction. And we need to be ready for that. But until we don't, we just need to watching the earnings, which is coming out this week. Very important companies, mainly tech companies. That could be a surprise. So we're not going to misinterpret the data, that's for sure. Not here, not in this channel, not in this project. But the story doesn't end, because there are market news. And interestingly, some of the narratives is changing compared to last week. Now, last week and 2 weeks before, we continuously heard about those news like S&P 500 hits record high as tech rally pushes stock higher and going forever. Now, that's the narrative is about to change, but very carefully change, because what they're reporting right now is that S&P 500 rallied to records on the back of just one sector. So they just trying to, trying to build this overhyped market situation down a little bit, and they try to signal that, okay, yeah, we can talk about that the S&P 500 is an all-time high and rally, and oh my God, everybody's in a pink cloud. But in reality, just one sector, only the tech sector. Within the tech sector, there's just a few companies pushing the S&P 500 up. But the other 10 sectors, 10 of them in the S&P 500 is down. There are share prices, which they are up even in those sectors, but the average of the sectors are down. So you can imagine if this bubble pops, there's nothing to get to provide any kind of support for the price if they start to fall. So we need to be very careful, and we know exactly the market is very sensitive for the news. When the news narrative is bending, that's something we really need to start preparing. We not necessarily need to, need to be sure that, oh, okay, this is the end, because it's not necessarily true. We've still got time. The largest rate cut expectation is for March, not for this Wednesday. Although there are high expectations for rate cut this Wednesday as well, but in reality, the majority of the market is expecting it in March. And we don't know what's going to happen in March, but if it's not happening in March because inflation is coming back and the Fed will be unable to cut interest rates, then the market will be very disappointed. So we've still got time, but you see the preparation in narratives as well, that there are some changes. And so not to talk about the really bad earnings quarter for regional banks and smaller banks, which is still an issue. And people don't believe that when we're talking about share prices, high share prices, and I'm not even saying positive, but somewhat not too negative earnings reports from larger banks like Morgan Stanley, JP Morgan, things like that. Those are the ones. And all the small banks are reporting earnings that they signaling that, we got another 3 to 4 months, and if the interest rate situation doesn't change, then probably we are gone. That's what the earnings saying. So there's a little change. Moreover, remember that I was reporting to you that China's Securities Regulatory Commission has announced a complete halt to the lending of restricted shares, set to take effect on Monday, so that's today. Additionally, starting from March 18, the efficiency of certain securities lending transactions in the securities refinancing market will be constrained, according to Reuters report. And since then, every other reports. Now, I told you what could be the effect for the short selling, and I hope you prepared for yourself, because they really could react. Now, don't forget that China is not reacting today just yet. We'll from midnight, so don't rush too much at the front. And it's Monday anyway. But on top of that, we got another Evergrande issue. The Evergrande shares hot trading after Hong Kong court orders liquidation, and that will be interesting, because last time we got this situation, even a couple of years ago, and then right after, every single time we got some news about Evergrande, the market is likely reacting for that. And because they're afraid of that company, they actually not reacting in a positive way. So every single time we got some negative news about Evergrande, there was some negative correction, some negative reaction, even on the US market as well. So they just take that in mind, because that, situation is just deepening with this Chinese company. So yeah, there could be some kind of threat. It's not a positive thing. And then don't forget the situation with the International Court of Justice, with the South Africa case. As you know, that the International Court of Justice technically given a place to this case for South Africa, and even trying to represent some kind of negative voice towards Israel. So it's a very interesting situation, but again, it's deepening the geopolitical issue, and therefore it's still a negative effect on the stock market. So from the very nice green color, we're going to a kind of light orange color, and that's because the news are bending to the negative side, not to the positive side. There is not much change in the market news in the crypto market, except one, because when I started the live stream, just got the news that Harvest Fund submits application for the first Hong Kong spot Bitcoin ETF. So this is only the application, don't forget. So now we need to see that how the Chinese version of SEC will approve or will not approve. We don't know that yet, but the first application is there, and that could be an interesting one. I don't know how long to take to make a revision for this application or getting any decision. I have no idea. I don't have any information. Maybe in the news is worth to reading off. It's on the website, our website. But anyway, so regardless this one, there is not much change in terms of the narrative of the news on the crypto market, nor on the forex market. But the forex market will change very quickly, because this week is about financial related macroeconomic data, which will change the narrative in the forex market as well. But the commodity market is experiencing some of the positive pressure from the news. For example, you experienced as well, and since then we are a little bit got down, but oil prices are definitely higher after Iran-linked drone strikes kill 3 US troops. Now, this is not a happy thing, and when we're talking about price increase in oil market, and we're really talking about the energy market, and it's rising back. By the way, I checked the US fuel prices rising back as well. So almost every energy prices are coming back to very high, not only in the United States, but globally. Except just a few. For example, natural gas is really down, but it's suppressed, so we shouldn't be surprised. But the rest of them is not in control right now, or whether we need to see whether it will be in control or not. But they are increasing, which means inflation, which means positive for the energy prices. And then from the food front, you don't hear too much about it, because the media does not really want to cover. And it's covering a little bit, but I don't know how much you know about it. But the French just about to burn down Paris again. Now they did that not long ago, and that's the second wave that they're trying it. They're blocking everything, and the situation is very tense in Paris right now, and this is a very inflationary again. We talked about it in the weekend video, so I hope you remember that. I don't want to over explain that situation. It is positive for food prices, so that's all we need to know about it. And if we take a look around how everything I just said so far, the market is reacting. If we take a look on the ETF index and the stock market, as we see, the finance sector is somewhat improving, not a lot of improvement, but looking a little bit better than last week. The health sector is improving, which we know that this is a safe haven, so we need to keep an eye on that. It's not very positive at the moment, but it's improving compared to last week. The tech sector is not improving, it's declining a little bit, but it's still in a positive territory. So yeah, obviously this will change this week, as you saw, because so many earnings are just coming out. Retail sales, the retail sector is improving just very slightly in the positive side. So it's mainly improvement. The tech sector is not really declining. It's just, a little bit worse than it was on last week, but it's still, as I said, it's very positive. Consumer services, however, a little bit going back down. And the car sector is improving. Now, the overall car sector is still very negative in terms of market sentiment, but there is an improvement compared to last week. Good to see that. We'll see how long can it last. Transportation is also improving a little bit, but the real winner is energy. And when energy and health sector is improving together, that means safe haven is improving again, which is good news for gold, by the way. But at the same time, it depends on how long energy sector can be strong. But that, again, would support the reinflation. Not an idea anymore, but the fact of the reinflation, what we're experiencing right now. The question will be that how much will they be able to hide the information or the data? So that's the situation. As you can see, the overall sentiment is improving on the market. No surprise, because everybody's in euphoria. But again, those safe haven sectors are starting to improve, and that's never a good thing. So we just need to keep an eye on that. That's a possible danger, by the way. In the commodity market, we see that the essential foods are declining, but they are still in positive territory. Non-essential foods are completely unchanged, while energy sector is improving. No surprise. That's why energy sector shares are improving a lot as well. Precious metals are somewhat improving, but it's not a major thing just yet. By the way, silver is better than gold right now on the short run, of course. Industrial metals are just a very tiny bit improving. That's really just a breath. And the livestock is keep improving. I don't know how much you remember. I was highlighting livestock, especially cattle, to you. Today I'm going to show you on the chart as well, because that's just madness what cattle is doing right now. I think you better following if you didn't so far, because I don't know how many times it got left, but yeah, that's a very, very strong market sector right now. In terms of the forex market, that's the difficult one, because it doesn't really move. But no surprise, we are ahead of very important financial related data. The DXY is completely neutral. I mean, completely. But regardless, that the EXY is showing negative sentiment on the market. So again, a proof that this situation is back when the DXY is unable to move anywhere, but the euro is way weaker, and therefore it's able to weaken further. So that's not a good news for the euro. The Japanese yen is unchanged. The British pound is finally moving back down a little bit, but it's still in complete neutral territory, while the QV is improving a little bit. From negative, it's going to negative to neutral. The Canadian dollar is actually improving a lot, probably because of the last week oil price change and the silver together. But if you read my analysis, at the moment and this time, you should not be surprised, because it was written down. And if these two things is improving, especially if they're improving hard, it is very positive for the Canadian dollar. And it was very positive for the Canadian dollar, as much positive as it can. I'm not saying that's the best week of performance, but obviously went up. And so it was in the analysis. So if you miss the analysis, then it is your problem, because I usually write down what the hell is happening on the market. So you better watching it. Swiss franc is improving a tiny bit, but still in negative territory. And the AXY is unfortunately unable to improve anything, despite the dollar is unable to improve. So if you take a look, apart from the Canadian dollar, everybody is down, but the DXY doesn't move. So that's supposed to signal to us that if in case the DXY is making just the smallest move to the upside, technically everything is ready to crash. There's just a few of them maybe can counterbalance somewhat this effect, but the currency sector is very, very, very weak right now. So be prepared for that, because we're gonna get those data and we're gonna get the market reaction as well. And the crypto market is obviously improving a little bit, but that's improvement. It isn't a huge thing, because we are still in a negative to neutral territory in terms of the market sentiment. So improving, but it's still negative. So we shouldn't be too happy about that. And just a couple of words about the technicals, because obviously we're going to go through on the charts as well in the second part of this live stream. But just to get in an idea what's happening on the stock market. Now, as you can see, this is the S&P 500. The S&P 500 is getting loose its volume. So the price is stalling. Not very scary low volume, but there is a decline. And the question will be how deep the volume loss will be. I think the volume going to come back, because this is a so important earnings week. So we're going to get this volume back. The question will be which direction. And well, as you see that so far we're in a positive territory, so we gotta think on the positive side, not to the negative side, despite what the economy and other information tells us. If it's going up, we need to think on going up. But we will see definitely. But interesting information about the options market, that as you can see, the WIX is not declining anymore. It's keeping up its stage. That's not a very good news for the stock market anymore, because once it starts to increasing on a hard way, then it will be very negative. It will be negative because, as I said, we're losing the volume, but at the same time increasing the price. And the put contracts are sneaky. They're just coming back on the SPY. They're not too strong on the SPX, but trying to coming back. So technically, what we can see from this picture is that the market is stalling right now, has no much power, but it hasn't got a decision what to do, because if we're gonna get those bad data, I understand that they're gonna try to bending those information. For example, oh my God, the companies exceeded the expected revenue. Yes, but the expected was cut by 80% compared to last quarter. That's not it's not a big performance. In fact, it's negative performance. And once people realize what that means exactly, that companies are at the edge, actually, and they are in trouble, then it's going to be a very, very interesting situation and reaction. So we are stalling and waiting for the volume and waiting for the market move, which depending on what information we're going to get from the earnings and obviously from the economy. Now, in terms of balance, there's not much I can say. Slightly crossed over the MACD, but the price is way higher. There is a good chance if we are making just a small correction from that point to the downside, then it could happen. Then we're going to experience a crossover again on the MACD, which would mean a pretty huge divergence of the daily chart. So in terms of the balance, we are at the edge of the balance. If there is a reason that whether we're going to get a MACD divergence or not, that means that we are on the thin line of the balance of the stock market, whether the majority of the power wants to see the price going to the upside, or they want to see the price going to the downside now. And we are right in the middle of it. And really, from the technical perspective, the question will be whether we're going to get this divergence or not. I know so many people are talking about RSI divergence, and oh my God, there is a divergence in RSI. Now, we don't look for divergence in RSI. Anybody who's making that is making a really big mistake. You could be lucky if you're searching for divergence on RSI, because the RSI is actually making a divergence almost every single minute. Because it's within borders, while the MACD cannot. So when you're talking about divergence, you're talking about the loss of momentum. How would you be able to measure any kind of loss of momentum when something is continuously adjusting the data, compress the data in order to fit into two different, or between two different value, which is 1 and 100. So it's a ridiculous, professionally ridiculous thing to searching for divergence on the RSI. Don't listen to them. If you really want to get some special out of RSI, I figured a new structure. Not so new, so many of you already heard about it, but this called the Batman. And wherever you experiencing Batman, then there's some negativity expected. And here is Batman. So Batman is strong, is more often than RSI and the RSI. Divergence and the RSI. So forget it. So divergence is for MACD. That's the MACD for the RSI is showing us different things, but not divergence. So that is all. So the balance is pretty much neutral, and the decision will be made on this week. I'm 100% sure from the technical perspective. Therefore, we're not looking very positive, but at the same time, it is in positive territory, but we either not looking negative at all. So that's a massive neutral situation. On the Forex market, the situation is different because regardless that the US dollar is actually consolidating on a very hard way, it does on a positive territory above the scale EMAs. And as you can see, the rest of the market is now trying to weakening back a little bit. The euro is weak. The British pound is finally already started to stall with negative trading days. The Japanese yen is also moving forward in a negative territory. The Australian dollar is, it was some correction to the upside, but in terms of the trading days, it is negative again. The Swiss franc is somewhat keeping up itself, but it's already turned over the scale EMAs, and if it's unable to break the 21, then it's gone, and there will be a second wave to the downside, which suggests there will be an upside wave on the DXY. So that's a really interesting situation, by the way. Canadian dollar is trying to hold it back. It's neutral, not negative. I mean, overall it's negative, but it's neutral. And the QE is turning into negative as well with the rest of the market. So the overall balance and the overall technical picture is pretty much negative on the Forex market. While if you take a look on the crypto balance, we unfortunately broke this median line, and we retested back, and we still losing the volume. So that's not, it's not the worst news ever, because when we're making a correction, we want to see that we're losing the volume. This is very nice, but at the same time, it started to go to the upside, and the volume is still going to the downside, which means, which could mean two things. So we either lost the power of the bull trend, and we can't provide any more volume increase when we're going to the upside. Well, this is bad for longer term. Or we continue this consolidation or correction, which means we need to get a rejection from this median line, and we need to visiting the top of this consolidation, what we talked about last week as well. So that's one more wave to the downside. So both of the signal trying to tell us that it's pointing to the downside. Now, the question will be whether will the crypto market receive any kind of positive news or not, which can outbalance the overall negative effect. But until not, because we obviously don't know that, Elon Musk could just say something next week and things are changing very rapidly. So I'm not trying to predict that. But so far what we see is a negative picture, a negative technical picture or balanced picture. Also, not to mention that the momentum is already negative, and we are just, we don't have a MACD cross, and it's in negative territory. So it's just, a blink of an eye, and it's going to turn back down to negative. So it can start accelerating the downward momentum, which is very dangerous. And it could be possible because, as you can see, the momentum, the stock MTM is increasing, it's rising. And if it's getting closer and closer to the 40 line up here, and there is no significant change in the MACD until then, neither in the momentum, there is no volume increase, there is no, a new higher high, for example, up here. That means that the next wave is going to be very hard in momentum to the downside. So Yeah, that's what we need to expect a little bit. And in terms of the volume, I'm not going to tell you a surprise. By the way, this week was okay. At least the cycle was okay. We increased a little bit when we opened the cycle. We're decreasing at the cycle closing. And now we will see whether we're going to get a higher low or a lower low compared to the previous one. But we are underneath the green line again, or with the averages around, which is not a good news because that's the bottom line of the volume. We don't want to see the volume underneath the green line because means that when the market is really slowing down, then that's happening underneath the green line, what you see here. That's what we experienced so far in the last couple of months. But there is a question rising about the crypto market, a really important question. And that question is, honestly, you remember a couple of months ago and then a couple of weeks ago. So I technically continuously trying to tell you that there is a data in the crypto market, which is the macroeconomics, which is continuously negative. And the reason why, because the financial sector, not in crypto, overall in the economy, is very bad. And the money supply is just going down and down and down and down. And that's absolutely okay that we got a positive geopolitics, we got positive market news and events. Sometimes we got positive market sentiments. The moment is not very positive, but usually most of the time it's positive. And most of the time we got positive technicals since we started this bull trend. But the problem and one of the major risks is the financial situation and the money supply. Because, as I said, there could be a point what we're reaching because there is no more money to pour into the crypto market. I mean, I'm talking about big numbers now, not small numbers. There'll always be some money pouring into the crypto market, but large amount of money. Because the Bitcoin ETF, it doesn't perform as well as they expected. Let's be honest. And I don't think this is a surprise. Because people are running out of money. And when we're talking about the crypto market, that's a danger. And, sometimes when I see on the charts that, it looks like we're running out of steam, honestly. And I'm not saying that it's impossible to move any higher with the total market cap, because it's possible, but we need a good environment for that. Now, we got good news. So this is the basic, what we need for a positive mood on the crypto market, right? And we got the good news. I understand it declined all the way down to 7 point, but it's still in positive territory. This is a strong point. It's using 7 point out of 17. Not the best, but it's not negative. So we got the basic positive mood, the basic positive narratives on the crypto market. We got very good geopolitical support for the crypto market right now. At the moment, I agree, we have a little bit negative, but by the way, it's completely neutral market sentiment. But it's overall, as I said, it's positive. It used to be positive. It's just a thing that because we're making a correction to the downside, obviously we're going to lose some sentiment, but there is no proof that this is a permanent thing, a permanent decline. From the technical perspective, just because we're making a correction, just because we're slowing down, we are in negative point. But again, that's just a good wave of sentiment, and it's gonna slip up to positive again very quickly. So we got everything technically to provide a healthy bull trend. We got everything to give reason to people pay money into the crypto market and start trading on crypto. We got everything, and it doesn't happen. And that's what it really scares me, that it doesn't happen. This is why my question is in my head, that whether did we reach this point, what I was talking about, that there is a possibility that a market cap will have a market cap because of the money supply. And I cannot state that this is what's happening, because I just don't have enough proof for that. But I have a feeling. That we're getting close to this point. I hope I'm not going to be right and the market will returning back up and start increasing and just rising, making new higher highs. There's more money pouring into the crypto market. I want to see that really. But I have a feeling that we're getting close to that point. And that could create a very interesting situation, because we got a generally good market environment on the crypto market, but we just don't have the money for, which is really strange, because then we would be able to come back in certain assets, but at the same time, most likely we would see a long-term consolidation instead of a long-term decline, which is weird. So yeah, interesting time on the crypto market, and I'm really wondering how the Hong Kong application for Bitcoin ETF gonna turn out. The reason why, because that would be a legal option of somewhat getting into contact with the Bitcoin price in China, and that's a big thing, because remember how was the volume when the Chinese market was active on the crypto market. Some of the volume could come back to the ETF market, not to the Bitcoin. But that's somewhat related, and we might see some positivity on the crypto market, and especially with Bitcoin as well. But that's really, we need to see it. So the question is that we see that the Western world is slowing down in terms of crypto, but again, we rise in the question: will the East save the crypto market with the volume, or we're gonna die out now because there is a money supply issue? That's the question, and that's the main danger and the main risk right now. And this is why we have a main risk that the trend could overturn just because we don't have enough money supply to keep it up. Otherwise, there is not much change in terms of the crypto market. But there are changes in terms of the ETF market, because the overall point is coming down from -20 to -25. And it was a higher high, so we started to go to the upside. And that's not a big change. So it's not like, we can't say that this is a beginning of a big correction or things like that. That's a little pullback right now. We could see a new higher high. It really depends on the earnings now. That's nothing else. But if you take a look, and that's really important. So we still got this large cap driven technical bull trend on some of the charts like S&P 500, Nasdaq, etc., etc. But we're slowing the increase, the pace of the increase. We're slowing with the momentum. That's somewhat understandable, because the market is preparing for the earnings season, which is this week, especially important, preparing for very important macroeconomic data. It's really watching the geopolitical field. So there are questions rising that what's happening actually. And the market is waiting now for the answers. So we're slowing down, which I think it's understandable. So that doesn't mean anything. That doesn't mean we can't go any more higher. That doesn't even mean we will go down. So that's a question still. Now, if you take a look on what is the sector which is supporting the current trend, which is bull in terms of the ETFs and the indexes for the large cap things, especially talking about S&P 500 and Nasdaq and maybe US 30 as well. So in that case, we got only sentiment and technicals. This is the only two which is in positive. The technicals is in positive 1 point. That's not very strong power, is it? And the sentiment is in positive 4 points, which is like, I wouldn't say that's a weak point, because it's not really a weak point, but it is unchanged compared to the previous week, which means there is no improvement from last week in the market sentiment. And so the problem is that even the news, which was supportive for this technical bull trend, is turning into negative. It got a -1 point. And I told you just previously why. So remember, what did I explain to you last week? When we have a trend which supported by fundamentals such as macroeconomics, geopolitics, and, for example, corporate earnings, and the technical trend is also going into that direction. So the overall point is supposed to building to the downside, not to the upside. When we got that picture, this is a healthy picture because the fundamentals are supporting the long-term trend direction. Now, if you have a different one, you have a trend which would be supported by the major fundamentals, such as the macroeconomics, geopolitics, and corporate earnings, but you have a different direction, you have an anomaly on the market. That's we calling, this general euphoria about, AI and tech companies and other things. But we could have only these three supportive for the trend. It's only technicals, market sentiment, and market news. And I don't know how stable this losing is. I don't know how stable the market news will be negative. It may be changing tomorrow because of the earnings. But if it stays negative, we lost one out of the three supporters, and there will be only market sentiment and technicals for the only reason why ETF and index charts are going up. Isn't that scary? And nothing, and I literally mean nothing, supports any kind of bull trend at all. So the bull trend, what we see technically, is living in just one place, which is the head of the people, and nowhere else. There is no company performance would support any kind of bull trend. There is no economic circumstances would support any kind of bull trend. There is no geopolitical circumstance would support any kind of bull trend. So this is scary. So the market going up because the people's head, that's exactly the scenario what we got in 2007. Don't forget that. Okay? This is why I'm saying, if those people who think this is a bull trend got a very mind-blowing information by the market, or an impact, any kind of impact which is impacting them as well, and it's surprising, disappointing them. For example, the Fed deciding not to cut interest rates in March and things like that. Now that's when they start to realize the reality. When they start to doubt the data of the unemployment rate. When they start to realize that they've been lied. And yes, this will be a very big disappointment. So guys, this is a very dangerous market. And we need to be careful, because this bull trend is only living in people's head. Nowhere else, not in the market, in people's head. But you know exactly what that means for you, because you learned at the trade in the market how to do that. And you know exactly that this is why, if you gotta go up because technicals are going up, you're gonna go up as well. But you know exactly when and why to get out, because you learned it. So I wish you a success in that. But if we talk about the ETF and the index market, we need to talk about the stock market as well. And there is not much difference, to be honest. But there is some difference. But, for example, the overall point is declining only with 1 point. So we got 30, minus 30. And we got this week minus 31. We're starting the week with that number, which is a decline, but it's a very mild decline. And as you can see, a very similar situation. Geopolitics are going down, macroeconomics are going down. I told you why. So I detailed it. Corporate earnings doesn't change so far because we are waiting for the most important information. Market news, however, is declining back to 0 from 1, which is not negative but not positive. So it's just neutral. We got the market sentiment and psychology is going up from 2 to 3 points. So this, again, as you can see, and by the way, the technicals are increasing from -1 to 0, but then it is perfectly neutral. So now, for first time in the history of this point, the technical picture on the stock market overall, don't forget that, talking about a big average, but it's neutral. And the bull trend is living only in people's head. Only in the people's head. Nowhere else. It's not coming from macroeconomics, it's not coming from the geopolitics, from the earnings. It's not even coming from the news. And that's a very similar situation. So the main risk of the stock market right now is some kind of bad earnings data, some kind of bad geopolitical event, or some kind of macroeconomic data which is bad, or any kind of macroeconomic related information such as rate decisions, etc., etc. Those are the risks of the market. That's what we need to be watching on the stock market. The forex market is scary. The macro doesn't improve. Geopolitics is actually declining, and I detailed you why. The market news is unchanged, but it's negative. The market sentiment is negative, unchanged, and the technicals are changing, just declining a little bit, just 1 point from -1 to -2. So not big change, some, but it's a decline. And it's now, this is a consolidation, you need to know. And as a consolidation, the breakout of the consolidation could be in either direction. But right now, it looks like we're losing the power. The forex market is losing the power, is losing the momentum, is losing the activity of banks. That could happen for several reasons. And the money supply, again, it's a big reason. But at the same time, when we're talking about banks' activity decline, it's never a good thing. So the money is not flowing good enough. It was improving for a long period of time, over October, November, December and January is already consolidating and not improving at all. Probably that's because the economy is very slow. I mean, it's really very slow, and this is the point when it start hurting the financials as well. So we gotta watch this market, because now we are returning back to zero and around zero. The macroeconomics is the only one which is halfway through to the downside, which is understandable why. But everything else is converging towards zero, so there will be a breakout in the overall data, and the average going to follow a certain direction, and it will depend on the DXY. So every single currency is very weak now. They're very responsive for the DXY. So whatever the DXY will do, you will see all of them going to the opposite direction, which is the best environment on the forex market. And I can't wait to see this, because then you gotta trade wherever you want, technically, because everywhere you're gonna go, you're gonna get some opportunity. But you need to know that the DXY will move by geopolitics, news, sentiment, technicals, macro. I can tell you all of them. But the macro it seems like a little bit less important for the forex market, and it looks like the forex market is waiting and wants to react mainly for geopolitics and the market events and news. So it's worth watching that, because we are talking about banks' reaction. And the commodity market is another interesting animal, the only animal which increasing the geopolitics into positive territory from 18 points to 19 points. But that's somewhat understandable. When we're talking about possible inflation, that means higher commodity prices. And so, yes, we know exactly that we got different sectors of inflations. We can talk about completely differently: energy inflation, food inflation. But the thing is, the food inflation is still there. Energy inflation is coming back, and then the overall inflation is going to come back again when the energy comes up, the gasoline goes up, then the delivery prices, and now we got supply chain problems at the Red Sea as well. So delivery prices already doubled, or at least 3x. If we take that higher gasoline prices and every kind of energy prices, no doubt this will be a hard one. And you see the market news and events is going up because it's supportive for that. That doesn't mean that the market news was happening. Oh my God, how good is that? Blah, blah, blah. No, they're not happy, but they have to report. And that's a positive effect on the overall commodity market. The sentiment, therefore, very responsive. It's increasing from 78 points. So the market is day by day more positive and positive. Of course, not every single commodity asset. Of course not. But the overall is improving a lot. So we got increasing bullish volume momentum, that's for sure. And you see, this is a healthy trend. The macroeconomics is supporting the trend. Geopolitics supporting the trend. Market news and events supporting the trend. Market sentiment supporting the trend. Technicals are not so strong, but supporting the trend. So guess what? Whatever is in bull trend right now in the commodity market is supported by fundamentals, technicals, by sentiment, by everything. So when we talk about stable market conditions, that means stable market condition. And that's pretty good. This is safe for a trader, very safe. So if you want to choose a market sector which is safe for you, I think you got to choose this one. Now, the main risk is negative geopolitical shifts. This could accelerate the things on the commodity market. What this can cause is a high inflation and reinflation again, which will be very negative for other sectors as well. So that's a chain reaction. And I'm really wondering whether we're going to experience it or not, but every sign is showing to that direction. So in conclusion, as I said, extremely important week, very, very important week. And we gotta be, we gotta be very, very careful with all the macro data, with all the earnings coming out. I try to following as much as possible. If you have any question about that, drop me into the Discord server. We can get it into the live stream. We're talking about the Discord server. That's actually faster. So use that opportunities. And now I'm going to show you a couple of charts. Just go through. So if you're pro member, you can stay with us and watching those charts.